Welcome to the WangHiro podcast, where we answer Malaysians' burning questions about personal finance with fact-based answers.
Investing is a double-edged sword. If you know how to invest, you could make yourself really rich. But if you don't know what you're doing, you could even bankrupt yourself. Welcome back to WangHiro with me, Louis, and my co-host, John. On today's podcast, we ask, how do you know if you are ready to invest? So, John, what was the first stock you bought and what made you decide to buy it?
I bought 3 stocks, and what made me decide to buy it is a friend's advice.
Common.
Oh my God! No, I even remember exactly when I bought it because it was budget. I can't remember specific year. I think 2008 or 9, one of those years, or even 7. Where I think it was 2007. Yeah, I remember. Yeah, when Najib became prime minister. It may be 2008 now. Yeah. Okay, one of those years where Najib was prime minister. No, sorry, before Najib. So it was Badawi. Because one of the companies I bought was this company called Brahim's.
Oh, Brahim. Oh, yeah. That time it was a quite popular stock.
Yes. Brahim's was because it was Pak Las, I think, was it son-in-law or some relative? I can't even remember today. And they were a catering company for the airlines, Malaysia Airlines and all that. So they said Pak La because of. So you see, the rationale. Looking back, I laugh. The rationale was that political connection in budget they announced and all that kind of thing, and the share price should go up after budget. I was like, okay, okay. So I bought 3 stocks. Ralco, I don't even know what they do until today. Brahim's and this group called K&M Group, which makes pressure vessels. So Louis, in your line of work, when you go offshore, you see a lot of these pressure vessels. The HP vessel, the LP vessel. Yeah. So K&M was one of the monopolistic players to build pressure vessels for platforms in Malaysia.
Oh, I see. Very interesting. How did you buy that one? Was it also your friend's recommendation?
Friend's recommendation. It was a hot stock. I didn't know how to read financial statements. I didn't know how to read an annual report. I just said, hey, now oil and gas price going up. Hot stock. Okay, cool.
Well, what made you trust your friend?
I guess I didn't know any better, to be honest. I just was eager to start. I was eager to make money. Can you imagine? This is 2007, 2008. Pre-YouTube. I did not have a mentor or a guide. The person that I tried to rely on was my remiser, which was my childhood friend from secondary school. And I remember this question very clearly. Maybe I ask you and see whether it makes sense. What's the difference between sales, revenue, and turnover? Just need to answer me. You don't need to tell me whether it's right or wrong. Just tell me whether is there a difference or not.
Sales, revenue, and turnover. Yes.
You feel it's okay. Actually, there's no difference.
No difference? Oh.
It's just different accounting terms and different languages. So turnover is a very British thing. Sales is a very American thing. Revenue is a very international thing.
Okay.
So I didn't know that. I thought, like you, yes, there was a difference. Okay. And you know what was the answer that my remiser friend gave me? He said, John, here's the glossary.
What? So did they know or not?
Even if they did, I don't know. I don't want to make a educated guess. They just said that you're on your own. Virtually what they're saying is that do it, you're on your own, go figure it out. I don't have time for this. Okay,
they don't want to be accountable, I assume.
Yes, exactly. So I was trying my best to understand, but at the same time, super eager. So for me, for those of you out there listening, you're eager to make money. I rather you pay yourself first. Pay yourself, learn, read books, attend some course, or if you think that you don't want to be scammed by some online guru, go ahead, read a book. I can tell you, I read many books after that, and I realized why I am where I am today. I paid for courses because it shortcuts so much of my time. I can easily attest to I paid easily more than 50 to 100,000 for all the other training books, whatever combined data sets, and yeah, without that, I doubt I would be where I am today, to be honest.
So is it safe to assume you don't own these stocks anymore?
Do you still? I had to sell, Louis. You know why? Okay. Because the next question you would normally ask me is that did I make money or lose money, right? So I put in 26K, I lost 25K.
Oh my gosh. I mean, how did you feel that moment you saw, like, and then like what was the time duration?
Time
like,
duration, 3 days. No, I tell you why. I tell you why.
okay, you lost 25K in 3 days, John.
Okay, I tell you why. Very simple.
Wow.
There's this thing called margin. Not margin. I didn't even use margins. I use we call it T+3 lah. Virtually, it's a leverage.
Mhm.
If you have cash, let's say 20K, you can buy up to 3 times the value of cash you had in your account. So that means if you put in 25,000 in cash, I could literally buy up to 75,000 worth of stocks, which I kind of did.
Oh.
So it's a short-term leverage. There's no interest charge. Okay. So that's why last time there was T+2, T+3, T+7. In the past, it used to be T+30. That means you buy, right? The broker actually has to fork out the capital to buy the shares first,
Oh, I see.
Then you owe the broker money, then the broker don't pay, then they try to, you ask your mom lah. If your mom invested 30, 40 years ago.
Scary stories.
Yes, because the script, sometimes the script can go missing one, Now all electronic is T+2. That means you buy the shares today, you only need to be coughing up or settle the settlement. Okay, it needs to be coughed up in 2 days' time. Last time it used to be +7. You're talking about 20 years ago, it's about 7. Then they bring it down to 3, and then now bring it down to 2. That means it's almost a cash upfront. Almost. Okay. So why I lost 25 in 3 days is because I bought at 75. I bought until 75,000. If the share price went up, I sold, I make money. Okay. But if the share price come down, even by a little bit, but because I leveraged 3 times.
Wow.
Yeah. So I lost everything lah. Margin call they'll call, hey John,
Oh my god, that must have stung. I mean, did that keep you up at night?
Oh, of course. And I didn't even tell my wife until today. But I've been looking at the 25 versus all the losses I've accumulated over the years of investing, doing business. 25 was a drop in the ocean.
And mine also like tuition fee, right, John?
Tuition fee, yeah. So, guys, if you don't want to lose 25K, please educate yourself first.
Would you say like, John, you were too greedy at that point?
Greedy, naive, young, gung ho, and then why worry ma? Got shell ma, got salary, nice salary coming in. So that all plays into your emotional psyche. Everybody thinks they're logical. Everybody likes to think they're objective, but they're not lah. Yeah.
You think like you are the one, right? You are different from others. You will be the one to make this money from the stock market, and we ha.
Yeah, and the best part was after that, right? I was still glued to the screen, trying to day trade. So while working, right? So what we'll do is you go in the morning, you buy in a position like 40 cents, and then 45 cents you sell already. You buy a big position, let's say, okay, big lah. Big means 6,000 lah, 8,000, not a few hundred ringgit lah.
Okay,
right?
yeah.
I didn't have that kind of money because I lost already, lost 25, right?
Yeah.
And then my friend who gave me the tip even better. Wow, 你牛奶钱还有吗？牛奶粉的钱. So I was like, because my wife was, I think my wife was either pregnant or about to get pregnant, or we just got married or something. Like my friend was joking. I said, bloody hell. I said, you gave me the tip somehow.
Yeah, I mean, dare to come and say this kind of thing.
Yeah. He said, yeah. So what about you, Louis?
So I actually don't remember what I bought. I cannot remember because I haven't touched that account in a long time. But I also did the same thing. Yet, some friends recommended, but most of them I simply pick, because like, maybe if you look at the brokerage screen, right, they'll be like, these are the hot stocks, and you're like, the broker very big, then you buy it. But I didn't lose that much, lah. I only put a bit because I wasn't working at Shell, so I was working at a contractor company, so that's money. So I put in about 3,000. My first time, I was like, wow. I guess, and I was actually like so like confident at my trading skills. I don't know why, but I even plotted in an Excel. So stupid lah. But I said, well, 3,000 if I continue, because like at the beginning I did make some money. Like 3,000 it became like 6,000, 8,000. I was like, well, if I continue this way, I'll be rich in how many months? In my brain I was like, wow, like I'm gonna leverage upon leverage on this capital to make more, and by this age I will be a millionaire. I calculated about 26 years old. And I started about 22 and a half. So I was like, well, very quick. Oh, I will get there. Okay, so eventually no lah, nothing could happen lah, because like obviously you pick out of no
No
foundation,
basis.
no basis, nothing, like you just pick out of emotions, I guess, if I was excited.
Yeah.
Then I also, like, when I saw everything red, right, eventually I lost about 80% of the money lah.
Okay.
Then I just feel like, okay, if I heard from some of like things I read online and heard on YouTube or something, or somewhere, some material, they were saying, oh, like, if you lose money, don't worry, just leave it there. Just leave it there.
Let's pray and hope that we recover one day.
Yeah, never recovered. Only got smaller and smaller. And that's how I eventually like lost 80. Like initially I only lost 50. And because I left it there, right? I left it there for some years. I thought, oh, maybe after 3 years of not touching them, they will recover. And I went in and then actually declined another 20-30%. I was like, okay, it's a sign. I'm just gonna collect back whatever is the balance, so I just take back a few hundred. Yeah. Then for me also, definitely not ready to invest. Shouldn't have done that. And after that, like a few years of doing that, like a few thousand here, a few thousand there, I think easily add up to more than 10K lah that I lost.
Understand.
They recover back like maybe 2,000-3,000 out of like 12,000-13,000 that I invested over that time. So I was definitely not ready to invest. So, but John, like obviously today, right, you are 16 years in your investing journey, and you shared with me that you actually beat the S&P 500 benchmarks. So obviously you have already transitioned, advanced your investing skills. Was there a moment when you realized, hey, actually I can do this?
Wasn't a significant moment, like one pivoting moment, but I think it was after accumulated. You see, in the beginning, right, I would say you would be lucky if the year that you started investing and you lost money. Why? Because the year you started investing and you made money, you kind of get confused. Not kind of, you will definitely get confused to say that it's your skill that made you money. Yeah, it would definitely, wow, there's an ego that you say, oh, it's my skill that made money. But I feel that the best measure is that the first few years that you started investing money and then you actually lost money, because either paper value loss or whatever, because then it gives you time to pause and reflect. Is your thesis correct? Do you have the confidence to hold longer? Do you believe in this business? Have you really thoroughly checked and done your due diligence work? Because it's actually work upfront. And I think one point or one accumulation point was actually because I managed my parents' money, their account, and by the first 3 years, red, it was really red. The fourth year, that's where the inflection point happened, and it just went insane lah, right? And I think with that was one milestone that I say, hey, actually I can understand this. And looking at my own portfolio, I could understand this. But the culmination of 12%, I've managed to return like 12% over 9 years, which beats the S&P. Was after 9 years. First few years up, down. There are years when the portfolio during COVID time, during the rush of COVID, the portfolio went up like I made 4x, 5x, right? And then came crashing down after that, right? Because now it's a lot.
Yeah. Correct. I mean, a lot of trends during that time.
Yeah, a lot of trends. But I really look back, oh, this is what you mean by being patient and playing the long game. Because 9 years, 12%. I just one day one of these he's head of research for a bank which I shall not name, and he said, I showed him my results, and I said, John, you put a lot of fund managers in Malaysia to shame. He said,
that's for sure.
Yeah, because I told him, it's not that I'm smart. Please don't get me wrong. I'm me sharing this with you. It's not that I'm smart. It's that I was so busy during the first few years that I did my work upfront and I let it be. I didn't let market jitters. I didn't like popular opinion cloud my judgment, because I took my time to be patient, and because I did not have time to focus on trading or to make changes to my portfolio, and I was working, that's where I think really kept the results to be this good. That patience and the ability to sometimes do nothing. Actually, investing is very boring, Louis.
True.
Yeah, trading is sexy. Investing is boring. Investing is really like what you paint, you put a layer of coating and you watch it dry, and that is probably one of the reasons why people succeed in investing, is because the ability to do nothing is a very key skill.
You have to be patient. I think Warren Buffett mentioned about temperament.
Yeah.
Right. So you have to have that kind of temperament. You can't be like, oh, I need to see movement like every second. Sometimes people have that, and I think the younger us, maybe we had that.
That's right. Action means something. Action means result.
Yeah, action means money, right?
Yeah.
Ka-ching. I think some people who are like trying to sell their programs, they tend to do that. Oh, look at me make like this much money in 10 minutes. That's that kind of thing is like very appealing. Like when you're young, you don't know any better, right?
Yeah.
Okay, so like between these, like how many years from when you started and when you started?
I would say probably the 5th year, 6th year. That is when you will really see results. One cycle. Yeah. If you've only done investing 1 year and the results are up, I said, you see, right? Again, I said if you started investing in a year where there's a phrase, a rising tide lifts all boats. A rising tide lifts all boats. Okay.
Makes sense.
Only when the tide goes out, you know who's swimming naked.
Yeah. Makes sense.
So if you are not, and you have not done, for me, like one cycle of at least 5 years, I think your track record is not enough to speak for itself.
You can't actually like know, right, whether what you're doing is right or wrong.
Precisely. You can say, oh, this year I'm up 100%. Okay, try to repeat that for the next 5 years.
Right. So like looking back, what would you say? Like, okay, you lost 25K, right, early in your investing journey. What would you wish someone had told you back then, or maybe today you share with our audience? Like, what would you tell them today if they're wanting to start investing but they're not sure? Am I ready to invest?
Yeah, I think few things. One, really understand what's an asset. What makes an asset valuable? A lot of people, the first impression they go into any investment scheme is how much money they can make.
True.
But they understand, they will know the price of everything, but they know the value of nothing.
Yeah.
So what I mean by value, what is an asset? What makes it valuable? Like, let's just say this aircon remote. Is it valuable or invaluable? I say it's valuable at the time I bought it, but it depreciates over time because a new model comes out, whatever. Then what makes a business valuable? What makes a car? You buy a Ferrari versus you buy a Kanchil, right? 100,000 second-hand Ferrari, if you know how to maintain it and keep it for long term, it's going to be very, very valuable collector's item in the future. But a Myvi, you see, it's a car, but you know how to value the more valuable one rather than that. Secondly, I think you have to be really calm about losing your entire investment amount. So that means financially, are you already having enough savings? You earn? Do you have good financial habits? And whenever you put an amount aside for investments, do you have the mentality that you have the confidence to lose everything, or you have the confidence that over time, because you bought a valuable asset, you'll appreciate over time? So I think that's the second pivoting moment to know whether you're ready. And third, I think this is very important. Every time something bad happens, share price comes down, whatever, you don't feel jittery about it. In fact, you feel more confident that you should like figure out ways to get more money to try to invest. Then you really have that kind of investor mindset, because most of the time people will say, well, the moment market is bad, right? I mean, most of the people that I've trained, when I ask them, have you started your portfolio? Oh no, we wait for the market to be better. Straight away, definitely not ready.
Oh, okay. That's interesting.
Definitely not ready.
So what's the definition of better for them?
So it can come in many subjective forms. That's why that's why I find it amusing. Okay. They say, I heard the news say that market is going to crash. I heard that FBM KLCI now is like lower than the analysts predict it's going to go lower. Or now recession is looming in US. So they from there, market is bad, is headline news on the news.
So it's basically like listening to the news and
listening to the news, other people's opinion, other people commenting about it. For me, right, there's no perfect time to start investing.
Right,
The
right.
perfect time to invest is yesterday.
That's true. That's true. If you think about it, the compounding, all right.
Yeah, it's yesterday or the day before. So for me, whenever they make statements like this, I know they're not ready. I'm just going to be truthful and honest
Yeah,
rather
it
than
makes.
try
I
to
think
sugarcoat.
that's the way you kind of know yourself, and also to prevent losses. Like if only we knew that and we listened to it back then, we would still have
Correct.
that 25K, my 10K.
Correct.
And
Correct.
think about it, yeah, that was like more than 10 years ago. The compounding of that.
Oh yeah, no,
Be
more than
today,
20, Louis. 2007, 2007, 17, almost 16 years.
Okay, just imagine. We don't want to put into calculator later hurt us.
Yeah,
Okay.
exactly.
So if someone just look at your list, right, that you mentioned, they're like, oh, actually, I'm not ready. They're at this point where you're just starting out. How should they get ready? There are some very interesting ones like copy trading, paper trading. So maybe you can go through that and also have a look at these two and see
Okay.
if they're effective.
Copy trading for me, you can copy 1,001 ideas. You want to even copy Warren Buffett, it's all publicly available.
Okay.
You can copy
Okay.
Warren Buffett straight away. Right, it's publicly available.
True.
But what you can't copy is this, Louis. His conviction.
Makes
Why?
sense.
You have never done the work. You can copy his ideas, copy stock ideas, mimic his portfolio to the dot. But whenever he buys and sells and why he thinks valuation is high or valuation is low and top up more, that conviction, you are not going to get it because you've not done the work. Okay.
Right.
Second thing, whenever you copy and you trade, you will fall into the fallacy of more action means more money again. And people who advocate copy trading, see who are the people who advocate copy trading. It's actually the brokers. Why? What's the incentive? Exactly. You see, right? Okay. That's why Charlie Munger has this phrase. Show me how this guy is paid, and I'll tell you how the results is going to look like.
Oh, that makes sense.
Very powerful. For me, it's like, who's paying for lunch? Who's paying for lunch? Show me the incentives and show how this guy is paid. You can understand how the outcome is going to be like already. You see. So copy trading, some people make money trading. The guys who make money trading really are professional guys. They have their own algo, they develop macro research, all these kind of guys. How are you going to compete with them? They spend millions or even up to hundreds of millions gathering data a year to make sure their trades are valuable. Okay, how are you going to compete with that? For me, look who your competition is. If you're the smartest person in the room, you're actually in the wrong room already.
True. Oh yeah. That's true. You have to leave the room, find
You
the
have to
room.
leave the room and as fast as you can, okay? Because you are likely to be the idiot, not them. Okay. Okay. Next, paper trading. You see, whenever you do paper trades, the emotion that you get versus real money is going to be very different. You go and ask the best investors in the world. They debunk this paper trading, paper investing idea. Why? Your emotional attachment to that is very, very different. The way you behave will be very different because it's not real money, ma. Okay, if you put in
True.
if you put in even 1,000 ringgit of your own money, the way you behave is going to be very different from 100,000 paper portfolio. You see, so I would rather that you spend time understanding what is an asset. It doesn't need to be stocks. It doesn't need to be even equity. It could be even property. It could be even fine art. Maybe you like fine art, or maybe you like collector's item like a violin or whatever, right? Be very good at understanding what creates value for that asset. Is it a certain year is it a certain painter? Is it a certain year that it was made? Or if, like for wine, is it a certain chateau? Is it a certain way that the like wines, when I like read just an overview, what makes wines valuable, and the things they have to do, like criteria, like what was the temperature that summer, who was the sommelier, things like that. That's why it makes wine certain value. This particular batch from this particular chateau. So you see, when the experts talk, they really know what is value. You get what I mean? Just it was a dry summer or wet summer, and then wow, I was like mind blown. Okay, so when you're ready to invest, that's what the things that is required out of you.
That's so you would say, like, everyone who wants to prepare should understand what
What is
they're buying.
value? What is the asset and what is value? What you're buying? Really, what is value to what you're buying?
How about financially? What would you say is a recommended like amount
Um,
to start
I
with?
think the standard stuff applies here. Very simple. Make sure you have at least 6 months, even better a year of your expenses all dusted, right? At least the foundation is there. Secondly, the amount you should invest, you should be comfortable not touching it for at least 5 years. Like I said, one cycle, at least one. If you can not touch this money forever, even better. But if you cannot touch this money for 5 years, I think it's already a very, very good thing. Yeah. So
Is there like too little to start with? Can I start with 300 ringgit?
I think it'll be tough. If you only have 300 ringgit invest, I think invest in bringing in more income. not
Okay. Okay.
bringing in more income. Yeah.
Yeah. Okay. Okay. Got it. Got it. Okay. Okay. Very, very good advice. So, anything to add? Sorry, John.
No, I think don't try to think that you can invest your way out of more income. A lot of people fall into this fallacy to say that by me investing, I can live a comfortable retirement,
Hello.
right? But this is the phrase that I always use with people, Louis. 0 multiplied by 100% KGA is still 0.
Yeah. True. 0 multiplied by like no matter what. Like
You can be
zero,
the best investor in the world, 100% KGA, but multiplied by
Everything
0 is
paper.
still 0. Yeah.
everything in the paper trading account.
Yes, exactly.
Oh no, it's not. I literally when I had a friend who said, look, I was such a good paper trader. If only this was real money. Like I heard that like 10 years ago. Still didn't do anything.
Still there, lor? I guess it's still there, lor.
Still there.
Yeah.
Okay, so hopefully in today's episode, you, our audience, have learned some tips to prepare yourself to invest. So if you're not ready to invest, it's best to take your time. Like John said, prepare yourself. And the most important thing is to learn what is an asset and how to value things. Okay, so that wraps things up for today's episode of WangHiro. We hope that you picked up some pointers for deciding if you're ready to invest. To our audience out there, based on our list, do you think you are ready to invest? Leave your answers in the comment sections below. Thanks for tuning in today's episode, and make sure to like, subscribe, and hit the notifications button to get updates from WangHiro. We'll see you again in our next episode. Bye-bye.